Hi, welcome to the Making Sense podcast brought to you by Navy Federal Credit Union. I'm Thomas Racca, manager of personal finance management here at Navy Federal, and I'll be your guest host for this episode. Each month, we take your questions to the experts to help you make sense of your money, pun intended. I recently read an article making a provocative claim that what we think of as poverty in the 1960s would translate to something like $140,000 a year today. Some economists, like Michael Green, use that shock value to highlight how housing, healthcare, and childcare now dominate family budgets. I've heard that perspective, and it's one way to frame the squeeze that many households are feeling today. We're not here to litigate where the poverty line should be. We are here to focus on what you can do and some practical steps to make 2026 more manageable. Today, I'm joined by Heather Long, Chief Economist at Navy Federal Credit Union. Heather has written and spoken extensively about how the middle class feels tapped out and why financial stress looks different now, even when the headline numbers say the economy's fine. In today's episode, we'll quickly set the economic backdrop for 2026, explain the pressure points and how they've shifted, and then we're going to get tactical. How to run a realistic January checkup, reset a budget that works, prioritize debt, and rebuild a cash cushion using tools like an emergency fund calculator and mission credit confidence dashboard to monitor your credit, simulate changes, set goals, and get alerts. Before we dive in, let's get real. Even the so-called experts make mistakes. Heather, welcome to the show.
Hi, Thomas. Good to be here.
Excited to do our first podcast together. This is a really great experience. I'm really looking forward to learning from you today. I'd love to start out. First question: what's one financial mistake that you've made that's taught you a big lesson?
Oh my gosh, there's so many, but let me tell you the one I'm most embarrassed by, and that is spending too much on rent. When I turned 30, I got a dream job in New York City. I moved to the big city. I wanted to live all of my friends, Sex in the City dreams from the 90s and early 2000s. And I stupidly got an apartment, one bedroom apartment on the Upper East Side. Boy, the view was good, but it was $2,500 a month. And that was just stupid. The rule of thumb, as you know, is never spend more than 30% of your take home pay on rent. I was above that number. That's how dumb it was. And, I don't know. I guess I thought I was going to throw parties in this apartment. I mean, it's New York, so nobody ever comes over to your apartment. You go and meet in nice restaurants or for the bar. So the whole thing made no sense. And what really hit home for me, Thomas, was I ran into a work colleague. It's a guy. And he was like, oh, I rent a house with 6 buddies and I pay $600 a month. Now, granted, that apartment was dirty. I would not live there, but he was saving almost $2,000 more a month than I was. And I don't care how many meals you skip, how much ramen noodles or kebabs you eat. I tried in order to make your budget work. If you are spending too much on rent, nothing else matters. It was a hard lesson to learn. Since then, I've gone the opposite direction and I spend as little as possible on rent and now on my mortgage, and it's really helped a lot.
One of my favorite quotes that we talk about in the financial space is no matter how much you make, that doesn't matter. It's how much you keep, right? Mm-hmm. Every month.
Amen. So what about you? What about you?
Lessons.
I laid it bare.
I thought long and hard about what story, because like you, I have a lot of examples. And I'm also going to be a little bit vulnerable with this. I went through a big life change in my early 30s. I got a divorce and it was a shock. There were kids involved, went to a one-income household. I went out and I got a payday loan. And I thought, well, this will be fine. I need the money today. I'm not worried about it in 2 weeks. And a couple of weeks later, I found myself in the same situation. And I've read so many cautionary tales over the years about how this becomes a vicious cycle. And it took me probably several months to eventually buckle down, bite the bullet and break that habit. And I'll tell you, over the course of those months, I repaid that loan many, many times over. I think up on the wall it even said the interest rate was something like 500%. And I walked in,
Wow.
I knew what I was doing. I'm an expert in it, and it set me back several months. And it was painful. Um it was really a life lesson to say, hey, life is going to happen to all of us. That emergency fund that our parents told us to set up, that a rainy day is going to be here at some point. It was rainy for a lot of weeks as I learned a really hard lesson.
And I
But
think it's
like,
so telling that both of us, it was in our 30s. I think
yes,
when you get to your third, like in your 20s, almost nobody has anything. We're all eating off cardboard boxes, right? But, in your 30s, you have this expectation that you want to have the appearance and you want to feel that you've made it. And you're right. We were both in many ways trying to project this image or keep our lifestyle going. And we didn't have it. And I think that's a real powerful lesson.
love that, Heather. One of the things that jumps out, and I'm curious your take. Over the years, did you shift your mental identity from that of one of keeping up this image of spending to becoming one of a saver?
Ooh, yes, yes, I did. And it's almost I become one of those people. It's a point of pride. Like I like telling people, "Oh, you like that shirt or those shoes? I've had those for over a decade." I've become one of those people. Almost too thrifty, or oh, I got that off Facebook Marketplace or a secondhand store. But I think once you get to my second one that I was going to share is like at first I've always been a pretty good saver, except for that New York City episode. But I was stupid and I always liked to see it in my bank account. I mean, it was something about logging in and seeing the money grow month by month. It felt great. But in a lot of ways, I wasn't letting my money work for me. And there's that podcaster, your rich BFF on TikTok. And she often talks about, and I think she's right, that saving is the first step, but you don't get rich just by saving. You have to invest. You have to use the CDs at least that we have at Navy Federal. You have to make your money. Once you do start saving and you do shift your mindset and you do stop paying too much for rent, you really need to make your money work for you by doing more than keeping it in that bank account.
I find it I find it fascinating. In personal finance management, we talk to 10 to 15,000 people per month that are going through some type of financial hardship. I hear your story, I share my story, and you went to school for this. And I've worked in this industry for 20 years, and still I make mistakes. My peers make mistakes. We're all human beings. I see how difficult it is for so many individuals out there. And it feels like the financial stress today is worse than it was 10 years ago. But I'm curious, as you're looking at the economy, you study this every day. Big picture, what are you seeing for our members today that they might be experiencing, and how does it look compared to the past years?
It's a great question. As we focus and we head into 2026, I think there's kind of three key themes to keep in mind. The first is this AI boom and just this better than expected growth we've been experiencing in the country and in the economy, or at least certain parts of the economy. And that's going to continue in 2026. It looks no recession in sight. It looks like a good year for the economy. But there's a but here. And that's two things that are high on my mind. I've been calling this a K-shaped economy in the sense that the haves and the have-nots, the top 20% of Americans, so people earning $170,000 or more a year, they're living La Vida Loca. We can see in our data and in the national data, they're spending more and more each month and doing the big trips and vacations and buying the cars. And then there's the bottom 80%, the middle class and the rest of us. And you can see that people can can still mostly pay their bills, but you can see the strain. This has become the Costco economy. People are shopping more at value and discount stores, not spending as much on travel or on eating out or on home improvement. You can see how tight people's budgets are getting. And I'm sorry to say, I think that's going to continue into 2026. Wage growth is slowing across the country, and prices and inflation continue to rise. And so people's dollars are literally not going as far. And I think we can all feel that.
Yeah, I'll tell you, one of the things that jumps out to me with everything in the media today is we talk about inflation slowing, but people tend to forget that we had some record inflation in the past few years. And while it's slowed, we are still dealing with some of those price hikes, right? That hasn't gone away. And I think we're still feeling the impacts from some of the COVID era. And it does feel like some families are reaching a bit of a stress point.
Exactly. And I can put a little bit of data on that. We don't just look at costs, we also have to look at people's incomes. So let's just go back into January 2020, what sort of happened in the past almost 6 years. Wages are in that period are up about 29%. So people have been getting some wage increases over that period. But let's talk about those core elements of the budget. Wages up 29%, but grocery prices up 30%, electricity up 38%, home prices up over 50%, rent up 30%, childcare costs up 30%. The only kind of core cost that isn't up, at least 30% or more, is healthcare, which is kind of a head scratcher. It depends really on how well your health is doing. But I think that's there's a there, as you're saying. When you look at the arc of the past several years, those core expenses have risen faster than wages. And that's a key reason so many Americans feel strained right now.
I go back to my thoughts on that Michael Green article, and I know some of the numbers that he gave seem to be impacted based on where he was getting some of his numbers, but seeing the some of the nationwide averages on the cost of daycare, the cost of healthcare, especially for those who aren't working for a big company, the cost of housing. You mentioned 30%, and
For
I'll tell
rent,
you,
yeah.
yeah, I see folks every day, and I know there's pockets around the country where the average is closer to 40 to 50%. Housing has really outpaced it. So much of what we're talking about could be in pockets of the country, and there's certain some regional impacts, but I think there's some opportunities, regardless of where you live, to start to get yourself into a better place. So,
Yeah, what to do about it? That's
yeah.
the big question. All right,
That,
Thomas, come on, give us your best. What to do about it heading into 2026? What should we be doing for our financial checkup in January?
This isn't going to be a one-sided conversation. I'm going to want a lot of your input on this too. First step, no matter what, no matter where you're at in this journey, if you're setting your goals for yourself, for your financial wellness in 2026, you got to know your numbers. If you have not sat down with a pen and paper and put out what's your income, what are your expenses, what are you spending on rent? What are you spending on electricity? What are you spending on utilities? If you don't know where every penny is going, then the rest of this conversation does not mean a single solitary thing. You're talking abstract, and this is something that is very concrete. So before we get into the steps of what you can do to improve your finances, you have to have a baseline. You have to know where you're starting. I think one of the things that you and I toss around is different ways to put these numbers down and different ways to make a budget. I'm curious, do you have any rules that you like to follow if you're talking to one of your friends or family members on just where should the numbers be starting out?
I mean, look, there's tried and true advice that makes a lot of sense, and I sometimes I read Reddit threads to remind myself of that advice. All right, let's be honest. But it's those three buckets: needs, wants, and then savings and debt payoff. I think 50% for needs, 30% for wants, 20% for savings and debt payoff. That's kind of the ideal, and that was what that number I think was getting at that 140,000 that you were talking about. That's sort of a good benchmark for what the middle class ideal in America today is. Now, the reality is most Americans are below 140,000. That's like the bottom 60% or even bottom 70%. So most people are not making 140,000. So I think the hard question immediately becomes, what do you do when those needs are taking up way more than 50% of the budget? And then, how do you alter these thinking and calculations?
Yeah, there's a lot that goes into that. And of course, every individual is different, every household is different, every family is different. So when you sit down, calculate it out, whether you use a financial calculator, whether you're doing old-fashioned back of an envelope, this needs to be a partnership. So if you're married, if you're cohabitating, everyone needs to be on the same page. And then if you're looking for a starting point, one of my favorite things is the Navy Federal Making Sense online hub. When I say there's a multitude of resources, we have articles and calculators for just about every situation under the sun. So no matter where you're at in your journey, if you're 18 years old, starting out, going up to college, or if you're getting set to retire from the military, there are going to be resources that are going to help you out and help you get from where you're at today to where you want to be. And then if you want a more personal touch, we do offer a free service to all of our members. Like I said, I work for personal finance management. We have counselors that do free financial counseling. We'll sit down with you, talk about your goals, and help you create a plan that works for your life. I'm sure we'll put a link in the show notes, but navyfederal.org/PFI. Click that link, fill out your information, and we can have a counselor reach out to you.
And it's so good. I just got to put in a plug for your team, Thomas. It's so good. And I meet so many people through my life and life circles, and this is what they want. They desperately want a free person or to just give them that reality check, that first reality check to figure out, help them get organized and figure out what they should start doing. And then if they need more advice, they can seek something else as needed. But the fact that Navy Federal members have this is a huge advantage. Take advantage of it.
I love that. I'll take a plug for my shop anywhere I can get it. So let's say someone goes through that. Someone is sits down, they put out their income, they put out their expenses, and let's face it, like you said, Heather, the numbers don't quite line up like they used to. This is one of my favorite things to talk about. What are some things that people can do today, right now, to make the ends meet more than they have last month? I'm curious if you have any best practices that you like to share as kind of financial hacks in your own life.
Yes. Well, I've got a couple, and you can tell me which ones would be better. First of all, I know I shared that time that I spent too much on housing. I can tell you there was also a year that I lived with my parents in my late 20s, and I was so embarrassed about it, but so many friends were like, "You're so smart. I wish I had done that. You must be saving so much money." So if you have a good enough relationship with your parents to do it for a year, think about it. Or any relative who will give you a discount on rent, think about it. Some other ones I started this past year. I started canceling some subscriptions. I had just built up over time. I didn't even realize it. Quite a few of those TV streaming ones I wasn't even watching. So now I'm a lot more selective that I wait till there's a deal and I go back in and I take breaks for a few months. Don't be afraid to cancel those subscriptions. They immediately half the time offer you a really cheap rate. Um, I drive an older car. I think a lot of us now are holding on to our cars. I've been in a lot of conversations with people who are like, "Oh, I really want to buy this new car." And I take pride in driving, I won't say the brand, but a lower cost vehicle. And it gets good gas mileage. So I think that's been pretty good for me. Another one is, we were just joking about it before we started recording this. I have become one of those people who loves secondhand thrifting of clothes. I even get together with some friends and we have clothing swap parties. So it's new to me, and just really taking pride in not spending so much money, particularly now that I have a kid. I don't have a lot of extra money to buy fancy new dresses or whatever I used to think spend all that money on. I cook a lot more at home. much easier for cost savings, much better for health. And I do a lot more exercise at home or walks instead of fancy gym memberships. All this stuff, it adds up.
You mentioned the older vehicle. I'll share a quick story just along those same lines. I bought a car when I started at Navy Federal in the mid 2000s, 2007, I think I got it. And it was just a few years ago, I relocated from Pensacola coming back up to Virginia. And I was packing up and I was giving some things away, just trying to downsize for the move. And a friend of mine that I worked with came over to pick up some stuff. And he said, "Oh, man," he said, "I like your truck." He said, it looks like the one you used to have up in Virginia." I said, "Oh, it looks exactly like that because it's the one I had from 2007, 15 years later." Couldn't agree more on that being a cost saving opportunity.
And I think there's a feeling that, oh, everybody else is, buying the new one or upgrading. And in actuality, if you look at the data, people are holding on to their cars longer than ever. It's, the average now is well over, I think, 14 years. So
Mhm.
this notion that everybody's buying new or upgrading is, it's really not true. I think there's a lot more people like you and I, Thomas, and good for them.
You have to
But
be.
what are some other ones? I know you do this all day long. You think about and you always have the best practical tips.
Yeah, I'll tell you from a positive mindset, first and foremost, you got to be careful about what you see on your scrolls and social media. To your point, there is such a sense of comparison in today's day and age, and that does unplug from reality, right? And that can apply to social media, that can apply to your news feed. Just bear in mind that we tend to post our highlights. We don't tend to post our struggles. Practical things you could do outside of keeping that positive mindset. I love shopping for discounts. So many of us have our cell phone provider and our car insurance and our home internet, and we just assume there's a loyalty discount. And the truth of the matter is, that's usually pretty far from the truth. So something like taking a half an hour once a quarter to look at all of your different automatic deductions and calling and shopping around, that can save you a lot of money every year. A perfect example, best friend of mine, uh, my best friend from high school called me. He'd been with a company for like 20 years. His teenager just started driving. He shopped around a little bit. He had been paying like $400 a month for him and his wife, and he got that rate cut in half with one phone call. Doesn't matter who it was with, just matters that a little bit of effort showed that he had been shelling out thousands a year that he didn't need to be. And then again, it really depends where you're at, but so many things can be expensive. So if you're in the market for a particular financial goal, could be buying a house, could be buying a new car. Bear in mind that there's a cost to that goal, to that opportunity. So if you have, let's say you're targeting trying to get into a home, a new house at some point in the next 12 to 24 months. I love what you said about couch surfing or moving back in with your folks or taking on a roommate. But recognize that every little dollar really will start to add up. I'm not one of those guys that says, don't have your $5 coffee because if it brings you joy, I think there's a huge return on investment with that. But I do think that wanting a new house and wanting a new car and wanting to go out with your friends and situation. It's an or situation. So
Hmm.
you need to prioritize, you need to decide what's going to bring you the most happiness, and you need to make that your North Star for your financial goals throughout the year.
Preach, I'll just say. And then I think we should also talk for a minute about the income side. I mean, obviously, it's a tough job market right now. The advice used to be go and find a new job. During the Great Resignation a few years ago, you could really up your salary by looking for new work. I think what we're seeing more of now is people doing various side hustles. Some people are able to make TikTok videos and be influencers, but I think more realistic for a lot of people maybe you, Thomas, but I always tell people, look, I have a toddler. I mean, the demand right now for childcare and babysitting, just $30 an hour is the going rate in the DC area for
Oof.
babysitting. Like that can add up pretty fast and is something that can be done and is really needed on evenings, weekends, holidays. Same thing, a lot of people, friends have had success doing the pet sitting or just again filling in on holidays, Thanksgivings, over the Christmas or New Year's holidays for pet sitting or pet walking has been huge. Another one is events are back. I mean, we talk about the K-shaped economy. The top 20% is hosting conferences and hosting, lavish weddings and birthday parties, and they always need extra people to help serve or to help set up. And getting a lot of friends have had success getting on temp agencies or getting jobs in that specific niche of the hospitality sector.
I love that, Heather. That's really good feedback. I'll tell you one of the things that we try and talk to a lot of our members about, really, regardless of where they're at in life. And I tend to aim it more actually at your demographic with small children at home, but it's so expensive, or it seems so expensive to keep them occupied. And the truth is there's so much to do out in our communities that's free that we don't take advantage of. Now, you made a great point. In the DC market, it's a little bit hard to get out and do things this time of year with the cold. But during the spring and the summer, there are so many festivals, there's so many national parks, there's so many community events put on at the local colleges, put on at local libraries, plays in the park. There's so many things where you don't have to spend a lot of money to go out and do things, or even just hanging out with your friends. Something as simple as staying in for a game night instead of going out to Georgetown. I think they say like the average drink down there nowadays is like 20, 25 bucks. Your night out got a lot more expensive if you have a couple and you need a daycare. Yeah, it's not you're not going out for $5 drinks like it was when we were in college. I would be really curious to hear your thoughts specifically for our younger members. I know I mentioned the housing market, and I know you talked a little bit about some of the big influencing some of the big economic influences we're going to see for 2026. I'm curious, do you have any advice for helping our young members get into home ownership? Maybe any habits or tips for financial resilience? I'm just going to let you have the floor on that for a bit.
Oh no. First of all, you got to have hope. I think what really scares me is how many young people in America don't believe and don't think the American dream is real anymore. And I think you got to remember that starting small adds up. And uh, so on the positive side on housing, there's more homes for sale now. It's in a lot of markets, it's almost as many homes for sale as 2019. And that's a good thing. That gives you more choice, more options. It also means it's no longer a Squid Game feeling. I remember looking for a house in 2021 and 2022, and I showed up in an open house, and literally there were 100 people there. I mean, it was just, I like walked in, turned around, and walked out. I was like, there's no way that any of us are getting this house. So the competition is down, more inventory. The rates have come down a little bit. We're not so much near 7%. Now we're 6%. And we may hit a point in 2026 where we start to see some 5 numbers. It's still going to be high, but I think really keep an eye, get prepared, get your paperwork ready, start talking, getting those pre-approval letters, kind of that be prepared mentality if you feel like you're close. One of the positives that we might see in 2026 for a lot of people will probably get larger tax refunds. There were a lot of tax changes that were enacted this year. And so, that could be a good chunk of money coming to you in the early months of 2026 that you should put away into that savings for a house or for something else that you have that dream for. Obviously, I want to be real. I mean, look, we've all read the headlines. The first time age of buying a home, the typical age is now 40
Mm.
years old. I mean, wow, you're in middle age solidly before you can potentially buy a home in some places. This used to be mainly a problem in New York City and San Francisco. Now it's a problem on almost every place in America with the home values that have gone up. Home prices are still very high, and the mortgage rates come down a little bit, but not a lot. The average mortgage payment in 2020 and 2021 was around I was just looking at this data. It's basically doubled. The average mortgage payment has doubled. It doesn't matter where your market is in the past 5 years. And that's tough. And there's no way around that. What I will say is a lot of people don't realize you don't need as big of a down payment as you think. I remember thinking I really needed to save 20% down payment. It's not the norm anymore. Certainly, Navy Federal has been on the pioneering end of doing a lot of programs to help people do 3%, 4%, 5% down instead of that 10 or 20%. That's the norm in the industry. So those are my cautious optimism for 2026.
That's actually a great point, Heather. I want to point out historically, and I think it's still true today, home ownership is the biggest opportunity for generating wealth for yourself and for your family. And I remember seeing one of your presentations not too long ago that talked about what you just mentioned about the American dream and how more and more people are feeling disheartened, like it's not a reality, but it can be. And again, I think we talked about some of the first steps we can take. And when you make your budget, if the gap in your income and your expenses is within a few $100s, some of these things that we talked about should be able to help you line it up. And one of my favorite pieces of advice for those not experiencing that, let's say you're in a good situation, you got a raise, things are starting to look up. Try to avoid what Heather talked about with lifestyle creep. That is probably the biggest consumer for those that are suffering on the top end of that of the K that you were talking about. There's so many people say I got a raise so I can afford more, and $1,000 problems become $1 million problems, and that's okay until it isn't. You mentioned some of the stuff Navy Federal is doing to pioneer to help people build that generational wealth and get into home ownership. Can you talk about some of the biggest differences between a credit union and a bank, and maybe how that matters for someone thinking about their financial future?
Look, we saw a great example during the recent government shutdown. I was sitting next to an economist from another bank, a large bank that I won't totally name check recently. But as I told the audience, who you bank with matters. In the shutdown, Navy Federal puts members first. We were doing no interest loans to federal workers who have a direct deposit with us and who were about ready to miss a paycheck. They still got that money because Navy Federal fronted them that money at no extra cost to them. So they could pay their bills and they could be all right. And other banks, big banks didn't do that. And why didn't big banks do that? A big reason is banks are for-profit entities. They are owned by shareholders, and that's their number one concern in the morning. Yes, they care some about customers. They don't want to lose a ton overnight, but their number one concern is their Wall Street shareholders. Whereas a credit union, we are all members. I was a member of Navy Federal Credit Union long before I ever started working here, thanks to my dad and his service. And, I remember, paying that $15 to be a member of Navy Federal Credit Union, right? We are the shareholders of Navy Federal Credit Union, and we are the people that everyone who works here thinks about when you wake up in the morning and when you go to bed at night. And that translates to lower costs, lower fees in many cases, better rates. I was looking at our mortgage rates compared to what the industry standards are, and in many cases ours are substantially lower. Our credit card interest rates are substantially lower than the average of most big banks, and certainly the service. I don't know if you've ever had a problem and had to call the Navy Federal 24/7 hotline. I've had a couple of times I had to do it, but oh my God, isn't it nice that a person answers the phone? And, I don't have to click 10 different buttons. No, agent, agent, agent. You don't have to do that here, right? You get somebody who can help you from the get-go and who is eager to help you. So you put all that together, and I'm proud to work here, and I was proud to be a member here for even longer.
It's funny. We talk about all the different budgeting opportunities and just looking over our numbers. One of the easiest things you could do to save money is become a member. In fact, I think our members save an average of $460 a year just because of the reduced fees and the reduced interest rates. I'll tell you a quick story about the member experience. And just because this hit really close to home, it really made me laugh out loud when I heard it. My oldest niece just turned 30, baby number 3 on the way. And she finally broke down and decided she needed a minivan. And this was a hard life lesson for her at this point. But she bit the bullet. She went shopping. She texted me and she said, "I want you to know I went with Navy Federal." She said, "It is far and away the easiest car buying process I've ever done." She said, "I put my info in. I told them what I wanted. They gave me a pre-approval check. I walked into CarMax." She said, "The car I was looking at, the minivan I was looking at was, I think, 41 grand, but they needed to put a new tire on it." She said, "It's a minivan. I don't care." She said, "I went with a different one on the lot that only cost 30 grand. She said, "So that was an $11,000 tire that it cost CarMax." But being that, she said, the process was so seamless, I walked out with it. She said, usually will take hours or days. She said, that was far and away the fastest vehicle I've ever bought. Now, I'm a little concerned that my 30-year-old niece has bought several cars in her life, but it was really cool to hear the narrative that the member experience is so smooth, and it's really nice seeing the data that it saves you several $100s a year. So with that, Heather, let me ask you this. Who could become a member?
It's a great question. I mean, I'm a good example, right? I personally didn't serve in the military. I always thought Navy Federal was just for military members, and it's not. It's for military and veterans and their families, or if you work for the Department of Defense. So for instance, my father was a Vietnam veteran, and he came with me, and all he had to do was show his driver's license that has the veteran mark on it. And they said that I could be a member of Navy Federal. And part of the reason that I joined Navy Federal was when I was trying to save more and make my savings go further. And I came here, opened that account a number of years ago, and I've been really happy ever since. And I preach it constantly for other people to take a look. Obviously, we want them at Navy Federal, but if there's any credit union near you, take a look.
I love that. And again, once you join, that really opens it up to your entire family, like you said. And that's a huge deal. Keep the savings in the family and come down, become a member. Once you open an account, you're joining a community that's here to help you with your financial goals and your financial success. And that's what today's conversation has really been about. Taking control of your finances, setting goals, understanding the resources that are available to you, whether it's building a budget, planning for home ownership, preparing for the unexpected. Navy Federal is here to help you start the year off strong. Heather, I want to say thank you so much for sharing your insights today.
Thanks for having me. I hope everyone is saving.
Words to live by. To our listeners, thank you for spending time with us. Best of luck with your financial goals for 2026. We will be back soon with more ways to help you make sense of your money. Until then, stay informed, stay proactive, and remember, your membership gives you the support and tools to achieve your financial goals.
Navy Federal Credit Union is federally insured by the National Credit Union Administration. This podcast is intended to provide general information and shouldn't be considered legal, tax, or financial advice. It's always a good idea to consult a tax or financial professional for specific information on how certain laws may apply to your individual financial situation. References to and participation with the military community does not constitute organizational endorsement. Navy Federal is an equal housing lender. Navy Federal Credit Union are members of the mission.